Hello everyone and welcome back to Finance at JCL. Thank you for joining me. And you've seen the news and what's been happening with them recently, and you want to look at how much they're potentially worth as an intrinsic value, then you've come to the right place, because today I'm going to be calculating an updated intrinsic value following on from my video a couple of months ago. For those of you that are new, welcome. And here we look at several things: my journey to a £1 million investment portfolio, step by step. I share my updates. We do stock reviews, such as we're about to do here, and some financial how-tos. So Alibaba, let's have a look at what's been going on first of all. So in the last year, we've gone from $310 per share, New York Stock Exchange, and we've been on a downward trend, and we're looking at, if we go all the way across here, we're now down at 157, pretty negative. So this is effectively halved in market capitalization in less than a year. So I did start buying. For full disclosure, I hold this stock, and yeah, this video is not a recommendation to buy and sell, it's just my opinion. But I did start buying at sort of the 220, 230 mark, and as it's been dropping, I've been adding more. I don't think I saw it coming down to 157. Yeah, I've been taking advantage, and I've added quite a lot in that 160 range. Probably one of my biggest individual stock holdings, and when my next portfolio update comes the start of September, then we'll see. So the context is lots of sort of uncertainty. All the Chinese stocks pretty much getting battered on a downward trend. So I'm not telling you, and I'm not looking at the strength of the company. This is purely a valuation part. If you want to know more about my theory behind this company and whether Alibaba is a good investment, not just from a valuation perspective, I'll leave a link to that review of a couple of months ago at the end of the video. So I'm going to use my discounted cash flow template, which you can either get through the Patreon site or the Buy Me a Coffee link, and those links are below. I'm just going to run through Alibaba and let's see how it's changed since my last review. The first thing to look at is the currency. If we have a look here on Morningstar, reporting currency isn't in dollars, so we need to do a conversion, and that rate is currently 6.5. When we look back to the last review, it was 6.46, so we're basically at the same level, and this was only in June, so 2 months ago. And if you look back at what we were looking for then, 10% a year return at a 25 terminal multiple. I think I had an intrinsic value per share on that calculation eventually at 328. Does that still hold? We'll start with 5 years and a discount rate of 10% as the baseline, and then we'll have a play with that. For the terminal multiple, I've got Yahoo here telling me the forward is, I mean, that doesn't make sense, 2.16. So let's find another source. So forward PE, according to Google here, is 19.12. So let's say the terminal multiple is 19. And today's market cap is 451 billion. If you're looking to double your money in 5 years, 15% a year return, you've got to do a bit of a sense check, which is, can the value of the company, look at market cap, realistically double 5 years? So could this be a $1 trillion company 5 years? I think as a sense check, it is possible here. Share price today in dollars, 158, 2.71 billion shares outstanding. We need to think of a free cash flow number to start this with. We're going to start here with the 172. That just gets converted into dollars, P of 19. Now the next key thing here is the growth rate in each year. So let's get a couple of views. So what's Yahoo saying first of all? 16% a year for 5 years. It's actually a very strong buy rating across lots of analysts as well. So I'm not sure that's a good or a bad thing, but we've got to hear a lot of coverage saying 16% a year. And we have a look at Simply Wall Street. We've got here 15.4% a year. So I think 16% is a good number to use. There's quite a lot of consensus there. Okay, so we just started with this as our baseline, 5-year period, 16% a year, 10% discount rate. That's got an intrinsic value of 309. So we have a discount to fair value of effectively 50%. So not even looking 10 years ahead, just on a 5-year basis. If you wanted 10% a year, you've got a massive margin of safety built into the current price. So if you're happy with the company itself and the risks associated with it, this looks like a great buy. My new kind of approach for companies that I'm buying that aren't dividend plays, I'm looking to double my money in 5 years. And that therefore is as a minimum, ideally quicker, but you need to give it time. So that's 15% a year. So I've changed this to 15% a year. And I think if it is growing that quickly, you might be able to get a terminal multiple of, let's say, 20. It became $1 trillion-ish company. Now, on those analyst consensus growth rates, we got an intrinsic value of 264, which we're at a 40% discount to that. So if you're looking to double your money in 5 years, there is a big margin of safety on Alibaba. So for me, this is why I've been adding additional shares in the last couple of weeks, and even I've sold other holdings and concentrated more into this company. So that's my view on Alibaba. And if you'd like to know what I'm buying and selling shares, then feel free to join me on the Patreon. It'd be great to have a few more people on there. So I hope you found that valuation useful. So I'm not a financial advisor, so don't go and copy this, but this is just my view and to explain why I have been buying more shares. So thanks for joining me. Look forward to seeing you next time.